Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a fall in growth in the Chinese economy. But first, in the US, the latest regional factory survey, this time from New York, has interrupted the negative trend we've seen recently. They report an uptick in June, but that was from a very low May result. The overall downtrend is still in place, though, it seems. Canadian home sales volumes were flat in June, interrupting a string of gains in the previous 4 months. Prices were flat too. Some people have called this market boring, a major change from a year ago, but there are still wide regional variations, with the East generally rising and the West declining. And China's economy officially grew 6.2% year on year in the second quarter this year, exactly as analysts had forecast, but that was down from 6.4% growth in the first quarter. While this rate may be the envy of the West, that is a 27-year low for them. Within that, however, they claim retail sales growth rates were higher at 9.8% year on year, and that industrial production growth picked up too in June to 6.3%. New home prices in China rose at their fastest pace in 5 months in May, complicating government efforts to keep frothy housing markets under control as it rolls out more stimulus for their slowing economy. In India, there's a significant credit crunch underway, and that is affecting their mortgage and home building industry in a major fashion. And India is showing signs of trade stress too. Exports fell almost 10% in June from a year ago. Imports were down 9%. Today, Wall Street is holding on to its record high position reached on Friday, but unmoved from these lofty heights today. Overnight, European markets opened the week a bit firmer, generally up about 0.3%. They followed Asian markets, which gained a similar amount, but it was all lower yesterday in Australia and New Zealand. In Australia, their business and regulators are whining about New Zealand regulation of Australian businesses operating here, suggesting we are now anti-Australian. They conveniently forget the outsized influence their markets and regulators have on us. First, it was the RBNZ suggesting that Aussie bank shareholders should back their New Zealand banks with more capital, and now it is the RBNZ refusing to rubber stamp a bad deal to sell off the New Zealand arm of AMP Life, which in turn jeopardises the whole AMP Life sale. US Treasury 10-year yield will open today at 2.09%. That's 3 basis points lower than this time yesterday. Gold is down $4 overnight at $1,412 an ounce. US oil prices are falling today as the impact of the US Gulf production recovers after the storm, and the weak Chinese GDP data suggests demand may be tailing off. They're now down to $59.50 a barrel. But the Brent benchmark has little changed at $66.50 a barrel. And the Kiwi dollar is stronger yet again against all the majors, and now at just on 67.2 US cents. On the cross rates, we're also firm at 95.5 Australian cents. Against the euro, we're up to 59.7 euro cents. That all pushes the trade-weighted index up to just on 72 and a 3-month high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.